What if you could buy a house without ever setting foot in a bank? Imagine a world where the seller not only hands over the keys to the property, but also finances the purchase. Welcome to the world of seller financing. Picture this scenario. Jane, a retiree, decides to sell her beachfront property. She has no mortgage on the house and doesn't need the full sale price up front. On the other hand, we have John, a self-employed graphic designer who has a steady income but can't secure a traditional mortgage due to his irregular income pattern. They both meet, and Jane agrees to finance John's purchase of her property. This arrangement is what we call seller financing. Jane becomes the lender, holding the mortgage on the property. John agrees to make regular payments to Jane just as he would to a bank. Jane benefits by earning interest on the money she's lent to John, and John gets his dream home without having to jump through the hoops of traditional financing. It's a win-win. Seller financing is not a new concept. It's been around for decades, but it's gained more popularity in recent years due to tightening lending standards. It's a flexible, viable option for both buyers and sellers, particularly in unique situations where traditional financing may not be feasible. Here's another example. Let's say a property is in poor condition and a bank won't finance it until necessary repairs are made. But the buyer is a handyman who is willing to do the work himself after the purchase. The seller could finance the sale and the buyer could fix the property, again creating a win-win situation. Now let's recap the key points about seller financing. Point 1. Alternative to traditional mortgage lending. First, it provides an alternative to traditional mortgage lending. This can be beneficial for buyers who may not qualify for a traditional loan and for sellers who might be struggling to sell their property. Point 2. Financial benefits for the seller. Second, it can benefit the seller financially. The seller can earn interest on the loan, potentially leading to a higher overall return from the sale of the property. Point 3. Flexibility in terms. Third, it allows for flexibility. The terms of seller financing deals can be customized to fit the unique needs and situations of both the buyer and the seller. Point 4. Expedited selling process. And finally, it can expedite the selling process. Without the need for bank approval, transactions can often be completed more quickly. However, it's important to remember that seller financing, like any financial arrangement, carries risk. Both parties should consult with real estate professionals and legal advisors before entering into a seller financing agreement. So the next time you're thinking about buying or selling a property, why not consider seller financing? It just might be the key to unlocking your real estate dreams.